I got the $100,000 funded account. And then I started trading like a complete coward. Every single decision I made was driven by one paralyzing thought: don't lose it. I was so terrified of seeing that account violated email that I totally forgot how to actually trade. But the moment I stopped trying to save my account and started trading to win, everything changed. The very fear that held me hostage became the key to my transformation, and what happened to my performance is something you've got to see. For any trader, getting that "congratulations, you've passed" email is the holy grail. You feel like you finally made it. You proved your strategy works, you beat the challenge, and now you have access to some serious capital. I remember that feeling perfectly. It was pure adrenaline and validation. All those hours staring at charts, all the losing trades on my personal account, it all finally paid off. But then, you log into the live funded account for the first time. The numbers are real. The capital is real. And suddenly, so are the rules. That 5% max daily drawdown some firms have? It's not a theoretical number anymore. It's a ceiling that feels like it's crashing down on you with every single tick the market moves against you. The overall drawdown limit feels like a cliff edge you're constantly inching away from. And that's when the paradox hits you. You earn this account by trading with confidence, by executing your edge without blinking. But now that you have it, a new goal sneaks into the driver's seat: preservation. You stop trading to grow the account, and you start trading simply not to lose it. For me, the symptoms were immediate and devastating. I'd see a perfect setup, and my plan was to target a solid 1 to 3 risk to reward. But the second the trade was 20 pips in profit, a wave of panic would wash over me. My heart would start pounding. My hand would literally shake as it moved toward the mouse. What if it reverses? What if this tiny winner turns into a loser and eats into my daily drawdown? So, I'd close the trade. I'd bank some tiny insignificant profit, telling myself, hey, a win is a win. But it wasn't a win. It was a strategic failure, and it was driven by pure fear. Then came the hesitation. A perfect A+ setup would pop up, the kind of trade I'd take in my sleep during the challenge. But now, with the funded account on the line, I'd just freeze. I'd stare at it, actively looking for reasons not to take the trade. Is there news coming out? Is the volume a little low? Maybe I should just wait for more confirmation. By the time I debated myself into paralysis, the entry was long gone, and I'd just sit there, watching the trade run hundreds of pips in my direction without me. This is what people call trading with scared money, and believe me, it was destroying my performance. This new way of trading, this constant, low-level fear, created a devastating downward spiral. My equity curve wasn't some dramatic crash. It was worse. It was a slow, agonizing bleed. A death by 1,000 paper cuts. My trading journal was filled with dozens and dozens of these tiny wins. $80 here, $120 there. They felt good for a second, like I was successfully protecting my capital. But my strategy, like any good strategy, was built on the idea that your winners have to be significantly bigger than your losers. By cutting my winners short, I completely torched my system's positive expectancy. All it took was 1 or 2 completely normal, unavoidable losses to wipe out 10 of those fear-based wins. I was stuck in a brutal cycle. Trade, take a tiny profit, feel relief, take another trade, take another tiny profit, feel relief, then take a normal loss and be right back where I started, only now I was emotionally exhausted. This behavior actually has a name: loss aversion. It's a cognitive bias first identified by psychologists Daniel Kahneman and Amos Tversky. Their research showed that for the human brain, the pain of losing something feels way more intense than the pleasure of gaining the exact same thing. In fact, many studies found that the psychological pain of a loss can be about twice as powerful as the joy of an equivalent gain. Now, apply that to a funded account. The loss isn't just a number on a screen. In your head, losing that account feels like a public failure. It represents losing your status, your credibility, and you're one big shot at becoming a full-time trader. This just amplifies loss aversion by a factor of 10. You get so obsessed with avoiding the massive pain of losing the account that you completely sabotage your ability to get the gains you need to actually succeed. I remember this one trade so vividly. It was a beautiful short setup on pound sterling to Japanese yen. The technicals were textbook, a perfect match for my plan. I got in, and the market immediately moved in my favor. But the whole time, I wasn't even watching the chart. I was watching my floating P&L and the daily drawdown calculator. The fear that a sudden spike could erase my gains and put me in the red was just overwhelming. So, I closed the trade for a measly $400 profit. And I sat there, for the next 2 hours, watching in absolute agony as the pair melted down for another 150 pips without me. That one trade, if I had just followed my plan, would have hit my full take profit for over $3,000. The $400 I saved suddenly felt like the most expensive win of my life. I wasn't just losing profit, I was betraying my own system. My breaking point wasn't some single dramatic event. It was the crushing weight of 1,000 of those frustrating moments. It was looking at my trading journal and seeing that undeniable, soul-crushing pattern, dozens of tiny wins, consistently wiped out by a few normal-sized losses. The math was staring me right in the face. I was on a guaranteed path to failure. I would either bleed the account to death with tiny cuts or eventually violate the drawdown limit just by trading in a state of constant fear. The aha moment came one evening while I was reviewing my trades. I looked at my equity curve, and I just felt disgusted. And then it hit me. I was treating the funded account like it was some fragile artifact in a museum. Something to be polished, admired from a distance, and protected behind a velvet rope. But it's not. A funded account is a tool. It's a high-performance vehicle. It's a weapon designed for one purpose, to execute your edge in the market. And I had been keeping it parked in the garage because I was afraid of getting a scratch on it. And right there, my whole perspective just flipped. The goal is not to keep the funded account. The goal is to make money with the funded account. The account itself is a means to an end, not the end itself. If I trade my plan with flawless discipline and the probabilities just don't work out and I lose the account, so what? I can get another one. I already proved I could. But if I trade like a coward just to keep it, I've already lost. I've failed as a trader, even if the account is still active. Does any of this sound painfully familiar? If you've ever cut a winning trade short because you were terrified of it reversing, do me a favor and hit that like button. It really helps me know I'm not the only one. And more importantly, let me know in the comments, what's the one fear that holds you back the most? Let's drag it out into the open. From that day on, I adopted a new philosophy. I was going to trade to win. This doesn't mean being reckless or ignoring risk, it's the exact opposite. It's about having such supreme, unshakable confidence in your tested strategy and risk management that you execute it without hesitation or emotion. It's about being an operator, not a gambler. I made 3 concrete changes to my trading. First, I redefined my risk. My risk was no longer dictated by the prop firm's rules, those are just guardrails. My risk became a fixed variable that I controlled. I made a hard rule. I will risk exactly 0.5% of my account on every single A+ setup my plan identifies. No exceptions. This was a game changer. A loss was no longer a catastrophe, it was just a statistic. It was a pre-calculated cost of doing business in a world of probabilities. The emotional weight of each trade just vanished. Second, I automated my greed and my fear. I stopped making emotional decisions in the heat of the moment. I started using a predefined exit strategy with partial take profits and a trailing stop. For example, my rule became, once a trade hits a 1-to-1 reward to risk ratio, I close 50% of the position and moved my stop loss to break even. That's it. This simple rule did 2 magical things. 1, it paid me, banking a small, guaranteed profit. And 2, it created a free trade on the remaining position. Suddenly, the fear of a winner turning into a loser was gone. I was totally at peace letting the rest of the position run, because there was nothing to lose and everything to gain. This one technique is the ultimate antidote to cutting your winners short. Third, and this was the most important one, I changed my daily goal. My goal was no longer to make money. My new goal was to execute my plan flawlessly. At the end of the day, I'd review my journal and ask one simple question. Did I follow my rules on every single trade? If the answer was yes, I won the day. I won the day even if I was down 1%. I won the day even if I was flat. Because I was reinforcing the only thing I can actually control: my own actions. This is the heart of focusing on the process, not the piano. I won't lie to you, the first few days were terrifying. Letting a trade run past that familiar 20-pip mark where I used to panic close felt completely unnatural. Watching a trade that was up $1,000 pull back to being up only $600 and not closing it took every ounce of discipline I had. But then, it happened. I caught my first real runner under the new rules. A trade that I would have normally cut for a measly $500 profit, I just let it go. I followed my partial exit plan, moved my stop to break even, and just let the market do its thing. That trade ended up hitting its final target for a $4,500 gain. One trade. It covered my last 10 losses and then some. That was the moment the psychological shift really cemented itself. The fear didn't just disappear, but its nature changed. It wasn't a paralyzing force anymore, it was just data. A loss was no longer a reflection of my self-worth, it was just my edge not playing out that specific time. My journal started to transform. It was no longer a sea of tiny green trades and a few big red ones. It started to look like a professional's journal, a healthy mix of small, controlled losses, some break-even trades, and a few magnificent, account-changing wins. My equity curve, which had been slowly bleeding out for months, finally started to climb. Not in a straight line, but in a healthy, 2 steps forward, 1 step back kind of way. I wasn't just saving the account anymore. I was finally growing it. I was finally using this incredible tool for what it was always meant for. The funded account you work so hard for is not a prize to be kept on a shelf. It is a tool to be used. The overwhelming fear of losing it is the very psychological trap that almost guarantees you will. The moment you stop trading not to lose and start trading to win, you finally unlock your real potential as a trader. Shift your focus from your daily P&L to your daily execution. Define and control your risk before you ever even enter a trade. Automate your exits to protect yourself from your own emotional brain. And trust the statistical edge you work so damn hard to develop. The real battle truly begins after you get funded. So I'll ask you the question that changed everything for me. Are you playing to win, or are you just playing not to lose? If you got value from this and you're ready to make that shift in your own trading, make sure you subscribe for more deep dives into mastering your trading psychology. Now go and execute your plan.